Good afternoon, everybody. Welcome to webinar 18, I think it is now. Today we've got another packed show as always for you, with three people going to be talking to you about their pitching to you about their businesses. All three are live on the site at the moment. First of all, we've got Jenny from FitPink. She's at 32% and just launched on Sunday, which is a great start to the campaign. We've then got Ollie Walsh from Pipit Global. He's on 119%, overfunding at the moment, still accepting investments into the business, and he'll be talking next. And then lastly, we've got John Brady from Bowsy, who is at 113% and still open for investment as well. If I can perhaps get everyone to switch their camera on, just say hello. First, I'll just give a quick introduction to Ollie. Ollie is, as I say, CEO of Pipit Global. They've just announced some great partnership deals that they've had over the last number of weeks with PMI America, Leaf Global, DA5 and Celanent, which has opened up a massive new element, massive new market for transactions for them to start to continue their growth, their international growth. Pipit Global is EI backed, of course, and it's a very disruptive fintech that's changing the established Western Union mechanism for the remittance of money from people into a different country. So that's Ollie, and he'll be coming up second. Secondly, we've got John from Bowsy. They've raised 340,000 to date, which is fabulous. They're being that amount is matched by EI funding as well, up to 360. So there's only a short amount of headroom left for investment now. They're open for another 3 days. So if you are interested in investing, you better get in there quickly. Bowsy's been the winner of the Tech Startup Company in 2020 from the National Startup Awards. The Bowsy, the platform itself is through course-specific students engage in work that opens up a vast pool of talent to larger companies who then use that as a way of recruiting their new people into the business. And John will go into that in a bit more detail at the first. So that's John and Ollie. And maybe, guys, if you could just perhaps go back into the background again, and I'll introduce Jenny in a bit more detail. She's speaking first. So Jenny, CEO of FitPink. It's an athleisure wear brand, and she's had an unbelievable first couple of years of the business. In those 2 years of trading, she made a profit of 70 grand in the first year, and is predicting sales of 1.3 million this year, and a net profit of 240,000, and is well on track to actually produce that as well. She's a highly experienced founder, and was EY Entrepreneur of the Year finalist a few years ago, with another business that she was involved with. So Jenny, there you go. That's your quick intro. So if you'd like to share your screen, and you can dive straight into your slideshow. For anybody who wants to raise a question, please do so. Please do so through the Q&A, not through the chat, through the Q&A if you can, please. Makes it a lot easier for both Fergal and I to read the messages. So away you go, Jenny, and see you in a few minutes.
Great, thank you, Chris. Hi everybody, thanks for joining today. As Chris said, I have been, I suppose, involved in quite a few businesses. I've been starting businesses since I was about 18, and apart from lecturing and managing a startup accelerator for Enterprise Ireland, I've been self-employed most of my career. So I suppose I have 28 years of experience of both success and failure. I've experienced business models that are not profitable, and some that are profitable but not really scalable. So now I think I found a product and a business model that is highly profitable already, and that's certainly scalable, and scalable globally. There are a number of reasons why this is a business that's likely to do well for shareholders. Firstly, timing. So we have the right product at the right time. Athleisure wear is the fastest growing category in clothing and has been since 2018. So it's pre-pandemic, and that's set to continue with the sort of huge increase in all things health and wellness, as well as other dynamics such as working from home and fitness and things like that. We have high gross margins, so our margins so far are between 65 and 71%, and that's set to, I suppose, increase once we're able to buy with more volume in our system. We have a low cost base. So as I said, last year we did 470,000 euros in revenue and 70,000 in profit, and that's with only 3 full-time staff. So we're operating from a low cost base. We are digital first, and we're a very lean business to scale. And lastly but not least, I think it's ambition and grit. As I said, I'm 28 years of experience, and I have a lot of wisdom and learnings in that time. And I really believe that this business has massive potential to deliver a really strong return on investment for myself, and hopefully for your investment if you decide to join us on the journey. So I'll tell you a bit more about FitPink. So our vision, we're here to create athleisure wear for women that they feel compelled to tell others about. And we're seeing that they are doing that. So in just over a year, we have over 2,000 4- and 5-star reviews on our website. And we have a huge rate of word of mouth and sort of virality in the product. We're known for our exceptional fit and the comfort and quality of the range. So they're designed with women with real figures and real shapes and sizes in mind. And you know, it's certainly about, for us, it's about fit really over fashion. We've had 2 years to really test this vision and this value, and our customers, we have 10,000 plus customers, they're telling us that this is what we are really strong on and really good for. And the main complaint with activewear for women is that it doesn't fit well. So as I said, leggings don't stay up, they slip down, they don't mold to your body shape. T-shirts show sweat where they're not supposed to. And we believe our range has fully and successfully addressed these issues that the product tend to have for our target market. So the problem is that most athleisure or activewear brands are designing the products, we think, for an athletic, gym-orientated and younger customer in mind. We know that clothing in this way doesn't necessarily flatter or support the normal shaped body. You know, our product, as I said, don't move on 10K runs. So we've tested them. I'm a runner myself. They just don't move. You put them on, they stay in place all day. That doesn't maybe mean a lot to people who don't wear leggings, but to those that do, it's a fantastic thing. We've things like pockets, they're high-waisted. So they're quite technical and they're made for the target market that we are targeting. So the opportunity is vast. It's already worth about 300 billion in sterling a year. It's growing at quite a rapid rate and continues to do so. And while the big brands dominate, certainly there is a move towards brands like FitPink that are online. And the switch to working from home has really driven a change in how women dress. Customers are telling us through our research with our customers and focus group that they're able to wear the product all day. So it goes from the school run to working from home to maybe having a walk in the afternoon and back. So it's sort of a product that's for the all day and the everyday rather than any single function. So our solution, you know, the core features, I suppose, of our product are that they're high-waisted. That is a feature that is really loved by our target customer and our customer base. And I think if you want to find out more about the product, the best thing to do would be to read our reviews on our website. All of those reviews are non-incentivized and they're verified. So you can't leave a review unless you purchased a product through the website. And they really are unfiltered. We don't edit them in any way. So they'll tell you what our customers think about the product. So high-waisted, stretchy, flattering, and smoothing. And our size range currently goes to 18, and we have sizes from 18 to 24 that will be arriving into stock in the next few weeks. And this is our main seller, our compression leggings. And as you can see, there's a lot of reviews and they're very, very popular. So a bit about our brand. We're a very authentic, natural brand. So we don't use models. We use real women with real bodies, as you can see from these images. 3 out of 4 of these women are customers of ours. I think most of them are mothers. And it's that authenticity that's really resonating with our target market. We're about function over fashion. So certainly our range is stylish, but we put function first. So it's about high-waisted, non-slip, products that you can wear all day without having to worry about. And we're the opposite of fast fashion. So our products are built to last. If they're cared for correctly in terms of laundering, they'll last people several years. And we are about supporting women too through our Planet International partnership, which has been part of our core values from the very first day we launched. For every pair of leggings we sell, we donate to Plans Because I Am a Girl campaign. So a bit about our marketing model. I'm not going to read all of this because it's very wordy, but we're a digital first company. Marketing is what we do really well. Last year we spent 50,000 on marketing, and we had a return on ad spend of 6.5. A sort of a benchmark return on ad spend would be about 4. So, you know, that shows that our marketing campaign is very effective and it's resonating with the people that we are putting it in front of. Last year we achieved 5,500 customers at a customer acquisition cost of €9. And the medium customer acquisition cost for e-commerce businesses is around €21. So we're very efficient in our spend in terms of marketing. We're very data driven. We test and we iterate, and we believe we know our target customer very well and what works for them. We have a high lifetime value, and that shows that we're great at not just getting customers, but because of the quality of our product, they're coming back for second, third, fourth, and fifth purchases and so on. So what makes us stand out? Why are we different? We have a relentless customer-centric focus in product and service. So apart from the quality of our product, it's important to us that the quality of our service is just as good. And that helps us get over the fact that it's a digital brand, I suppose, and people can't try on the product as they would in retail. So we're very focused. We have a chat box on our website that we have manned by real people, not bots, from 8 a.m. to 11 p.m. 7 days a week. So we're very much responsive. We answer all of our messages generally within a few minutes, probably not more than an hour. And as you can see from our reviews, that is really helping us stand out too in our market. As I said before, fit, they just don't slip down, and that's probably the key differentiator. Authenticity, so people love that we are using real women with real bodies rather than models, and we get a lot of feedback about that. Our price point too, we are you know, better priced, I think, than a lot of our competitors. Certainly our Irish competitors, their hero product leggings, their sort of bestseller back leggings would be €69, €65. Ours are $49.95. And again, that is something that people are really noticing, that value for their spend. And versatility. So we have people telling us they're wearing our product. The gym instructors are wearing it, working from home. We're even getting feedback from postpartum physiotherapists in hospitals around Ireland that they're actually recommending our compression leggings because of their support for abs and lower back. So results so far, as I said, we had revenue last year of 470,000. We were able to donate 6,000 of that to Plan International. We made a net profit of 70,000. We have 10,000, actually that's more like about 12,000 engaged customers. We have high gross margins. We have a good sustainable customer acquisition cost, which is going to help facilitate our growth and an effective and efficient spend of our investment. We were All Ireland Athleisure Brand of the Year in 21, and we are stocked in several well-established retailers such as Derval O'Rourke's platform, derval.ie, Brian McCormick Sports, Anthony Ryan's in Galway, and 1 or 2 Donegal department stores to add to that. So our growth strategy, we're looking to build out 4 country-specific websites over the next 2 years. And really develop out our multi-channel strategy. So currently we are using paid advertising, and we're very strong on our socials, but we really look to build that out into other channels. And further grow our network of retailers. So to find other key retailers around Ireland and abroad that can stock and market our range. But really we want to double down and optimize what we know works. So we have almost 2 years of learnings, of data points, and of marketing spend to really analyze where the product resonates, and we look to double down on that to grow our business. So there are figures over our projections. Sorry, these it's in the way here. So yes, we're looking to achieve up to 10 million in turnover over the next by 2025. So that is the growth that we are forecasting. In terms of growth. So our team, myself, Laura, Emma and Shannon are our core in-house team. Between us, we have a fairly broad skill set. We also work with 4 other part-time remote contractors that help us on the digital side and on the very specific different aspects of our digital marketing. Advisors, we have Alda, who I've known from my Entrepreneur of the Year Awards days in 2007. Alda is really strong on strategy. Fiona Campbell, another Donegal woman who's now based in London. She's worked with Gymshark, and she's very strong in terms of online and digital marketing. And Richard Lennon is based in Galway. He's our accountant and acting CFO. So investment, we're looking to raise 300,000 at a valuation of 2.5 million. We're EIS approved, so your investment of 1,000 only costs 600. And we're looking to use the money to build out a specific marketing team and really invest in our brand and those channels, as I spoke about earlier on. So why invest? It's an opportunity to invest in a proven, fast-growing and profitable company at a sensible valuation. We have a database of over 10,000 engaged customers. As I mentioned, the quality of our product and service is evident in our reviews. And athleisure is the fastest growing category in clothing, and that was pre-pandemic, and that growth looks set to continue. We've an experienced team, and your investment qualifies for 40% EIS tax relief. And lastly, there's a comment there on the Spark crowdfunding platform on our page under the discussions tab, a comment left from Connor as to why he's invested. I've invested exposure to fast-growing sectoral trend that's unlikely to change with high margins at an 85% haircut to Lululemon on a price earnings basis. That's another perspective on why FitPink is a good investment. So thank you very much, and I look forward to your questions.
Well done. Thank you very much, Jenny. That's a great presentation. Yeah, good number of coming through. I'll take the first one. And what makes you different from, perhaps you can unshare your screen actually, Jenny.
Yes, there you go.
What makes you different from another Irish athleisure wear brand?
I think our brand is very different in terms of our imagery, our photography, our target market. So as I said, we're very much an authentic brand. None of our photographs are in gyms. It's very much the outdoor, the everyday, and the person. We're probably targeting a slightly older demographic than some of our Irish competitors. So they generally are the kind of maybe up to sort of late 20s, 30s. We're 25 to about 60. In fact, we have customers in their 70s that send us some great photos. And price point, as I mentioned, our hero products are $49.95. Our Irish competitors' hero products are 60 euros, I think, and 69 euros, respectively. So there's a number of key differences.
Very good. Very good.
Excellent. Hi, Jenny. Very good question in here from Dermot, actually, and a nice compliment as well. So FitPink has excellent digital marketing campaign and targets the local market very well through their brand ambassadors. What percentage of your sales would be in the Northwest region, and how do you plan to expand that further into Ireland, the UK, and worldwide? So probably a good idea maybe just to talk about where your sales are coming from location-wise.
Yeah, so that's a good question. So currently 80% of our sales are from Ireland and 20% are split between the UK, the US and the EU. Of the 80% of the Irish sales, what's in the Northwest, I'd say it's less than 40% now. In our first 6 months, it was probably 80%, but that is, we're certainly very strong in every other county in Ireland at the moment. And it's becoming less and less every month and growing in every county.
Okay, where do you manufacture, and is it verified as ethical supplier?
Yeah, so we manufacture in China. All our products are designed here in Ireland, manufactured in China. Our suppliers, we only have 4 suppliers. They've all been audited by ourselves, and they've all signed up to the ETI code, which is a global code of ethical trading. So yes, we believe they are treating their staff fairly.
Very good.
And paying them fairly as
Perfect.
well.
And you mentioned 4 countries there, specific websites for 4 countries in the next 2 years. Which countries are you looking at, Ginny? What areas are you expecting to?
So probably 2 of those will be European countries, one Australia and also the UK. We're currently supplying the UK, and that is growing every week, I suppose, out of our existing website. The IP, it'll track your IP address so that you're able to see your country-specific currency based on where you are. But we really want to get deeper into the specifics for each of those countries as we start to grow.
Very good. Double question here, Jenny, please. Are you selling on Amazon? And have you any deals in the pipeline with bricks and mortar stores, lifestyle, sports, JD Sports, etc.?
We are looking at Amazon, certainly. We're in the middle of building out our listings on Amazon to test that. We don't have any deals with any of the larger groups, the larger sports groups, but we'll certainly look at that. We have, as I said, with Brian McCormick Sports in Letterkenny, we supply him, and we're absolutely looking to supply more retailers around Ireland. So yes, we're very much open to that as a way of getting our brand in front of our customers.
Brilliant. And in terms of the online side of things, what's your cost of acquisition and the average kind of profit or revenue that you're making per customer on the site?
Our average spend on the site is 63 euros, I think. I just have to double check that, but it was around the 63 euro mark. And our customer lifetime value is around 97 euros.
Excellent. And what's the cost to acquire?
Cost per acquisition is around €9, €9.09.
Oh, wow. Okay, that's fantastic.
Yeah,
excellent.
It's been strong so far. But
Okay.
again, it's very targeted, so we really do tend to try and match our advertising with our target market.
Okay,
Perfect.
loads of questions in here actually, Jenny, but we'll have time for probably just two more. So what earning multiple is typical for an exit in the industry?
Sorry, can you repeat that, Chris?
What earning multiple is typical for an exit in the industry? We can answer that offline if you'd like, Jenny, to kind of give a more in-depth kind of accurate figure on that. So there's no problem with that.
Yeah, I'll certainly answer that offline. I have a sort of a rough figure, but I'd rather do more.
Yeah, no, that's no problem at all. Yeah. Okay, so do you intend to match the Zara concept with quick fashion changes, or can your supply chain cope with that? I think you've already answered that. It's the fact that you're not kind of fast fashion, but perhaps you want to elaborate on that a little bit more.
Yeah, so absolutely, we're not looking to do the Zara model. We have a core range. We have about 43 items in our range, as in different colors of existing products. And we're very careful to grow that seasonally. So we bring on some new products for autumn, winter, and then again in summer, spring. And we have a core range. So we make sure that we get rid of some products and we sell out of those before we bring in new products. So no, we don't look to do the Zara. We're about a core range that adds on some seasonal pieces and that pieces that last for a long time. So it's not much about fashion. It's really about the functionality of the product and making sure that it's fit for purpose.
Very good. Last question then, please, Fergal.
Yeah, so a question just on the exit strategy. What's the time frame? What the strategy, Ginny? Who's there? I know there's a lot of acquisitions in the space. You know, so what's your strategy there, and the potential time frame for investors here on the call? When can they hope?
So the potential time frame, I think, is going to be between sort of 6 and 8 years. And yes, there is a lot of acquisitions as it's such a growing and such a, I suppose, an early stage sector. You know, the likes of Gap and Target are acquiring smaller brands and starting their own brands. So there will be a lot of action in the space as retail sort of groups look to bring on brands in the athleisure space. So that's where we would look to exiting in between 6 and 8 years.
Brilliant.
Very good.
Excellent. Lovely.
Thank you very much, Jenny. Thanks, Fergal, as usual. So maybe I'll ask you to both switch your cameras off and I'll get Ollie to come in. Ollie, you there?
Yep.
Thank you very much, Ollie. Well done. So Ollie is CEO of Pipit Global. As I mentioned before, they've already reached their target, their minimum target of, and they're at 119%. Still open for investment if anybody wants to invest, though, so please do so. But closing at the weekend, I think, isn't it, Ollie, at the moment? As we have mentioned in the past, and as is on the site, the investment's a safe investment, a simple agreement for future equity. And maybe Ollie will go into a little bit of that, but we can answer some questions on that if necessary. So Ollie, I'll leave it to you. So please, if you can share your screen and start your presentation, I'll let you crack on.
Okay. Thanks, Chris.
Yeah, that's good.
So as Chris said, I'm Ollie Walsh. I'm the co-founder and CEO of Pipit Global. Okay, immediately my screen won't move. So I'm going to have to do this format because the screen won't change. So Pipit Global, the story so far. So we are a for-profit social impact fintech platform. So we're a B2B platform. So our merchants are banks, e-wallets, e-commerce platforms, and billers in emerging markets. Consumer is a cash user, so an unbanked migrant. So unbanked where they live. They might have a bank account at home, but not in their home country, but not where they're living. So globally, there's 272 migrants, with 54 million in Europe at the moment. As Chris mentioned earlier on, we disrupt the Western Union model, where migrants remit cash home. So they send cash to be collected in cash. Our model The migrant lodges money directly into account at home, or they can make a payment directly for a family and friend on a website or pay a bill. So now we have 500,000 cash-in points in 30 countries, either signed up or integrated in live. And as Chris said, we've had a few big announcements recently. So when we did our last Spark webinar a few weeks ago, that was 320,000 cash-in points. So it's growing rapidly, our network. The first corridor that went live was UK to Ghana. And in 2020, we processed 1.5% of the total remittance market through that corridor. So in 2020, we did 6.5 million pounds worth of transactions, 70,000 in revenue. So that was primarily UK to Ghana. We also did some to Nigeria and to Kenya as well. So we're now scaling up and launching additional corridors from Europe, Africa, Latin America, North America. So the problem we're solving is that the cost of sending money home is way too high. Remittances sent by migrants living in rich countries provide substantial support for families at home, way more than foreign direct investment or way more than aid does internationally. In 2019, $7.5 billion in cash was remitted, which for the UK, Europe to Africa, 9.5% is the average cost of that, which is a huge fee for a migrant sending money home. Within Africa, it's even more expensive, with some corridors being 20% of the transaction value. And our mission is to bring down those remittance costs and put more cash into the pockets of those who need them, family at home in emerging markets. So one of the questions we're always asked is cash not dead? And it isn't. Across the developed world, US, UK, EU, cash has grown over the last 10 years. In the Middle East, 80% of all transactions are cash, and in Asia, cash has grown by 46% over the last 5 years. We just went live last week in Mexico. 90% of all transactions in Mexico are in cash, and in Brazil, where we're about to go live, at 70%. And the total cash in circulation at the moment is $7.6 trillion US dollars, and it continues to grow. Excuse me. So the World Bank figures are 230 million private sector employees are paid in cash in 2019. And the big problem with cash, of course, is it can only be used locally. And that's part of the problem we solve, that we digitize cash so it can be used internationally. So how do we use Pipit? So we can do international cash payments, cross-border bill payments, e-commerce across borders. We can talk about e-wallets, e-commerce orders, mobile money loading, and international cash lodgements. So like I said, we have 500,000 cash-in points. We now have 2,500 billers, utility companies mainly, data, phone, TV, electricity, water, in 58 countries connected to our API. Accounts in Africa and Latin America. And some examples of consumer can load cash into their Amazon account. PayPal Cash is similar. We can now load cash into a PayPal account. And Zoom Bill Pay, which is a PayPal company. So what's the consumer experience? So like I said, we're a B2B provider. So we partner with banks and e-wallets. So an example of one of our clients is, for example, ZPay, which is our Ghana partner. So the user logs onto their ZPay account. They create an order saying they want to lodge £100 into that account, and they get one of our barcodes within the ZPay ecosystem. So they're not redirected to Pipit, and the consumer does not have a Pipit account. Once they get that barcode, they can bring it into one of our cash collection networks, scan the barcode, and essentially lodge the cash over the counter. Once that barcode is scanned, our API notifies ZPay that the account's been topped up, and then we settle with the merchant. Our fees are, we have a small integration fee, which where applicable. A transaction fee can be between 0.5 and 3.5%, and sometimes we have an effect fee as well. So the 3.5% is obviously dramatically less than 9.5% to send the cash home. In terms of who uses Pipit, so it's migrant workers are our customer base. So migrants in Europe send an average of €300 home per transaction 11 times a year. so a total of 3,300. It's the average per migrant remits. That's 66 euros in fees for us, which is over a 3-year lifespan would be 198 euros. So with the 54 million migrants in Europe alone, the growth potential for Pipit is significant. Our global footprint, we're filling in the map rapidly. As you can see here, we've collection partners, like I said, across 30 countries. The green zones where we have multiple partners. So we've cross-country bill pay, we've mobile money or e-wallets, banking partners or e-commerce partners. So we're really following the migrant routes where migrants move from. We're signing up banks, e-wallets, etc., and where they move to, we're signing up cash collection partners. So we're working with some well-known brands. I mean, everybody be familiar with PayPoint as a cash collection partner. Cellulant is East Africa's leading payments company. ZPay, like I mentioned before, a big e-wallet in Ghana. Wari are a West Africa cash collection network. Keiki are probably one of the biggest billing aggregators in the world. Flutterwave are Africa's largest payments institution. Finastra, a banking platform. Checkout, or a Europe-wide payments institution. So we're partnering with globally recognized brands in the payments industry. In terms of competition, we kind of measure competition or measure this market in terms of accessibility and cost. You know, the Western Union MoneyGram is accessible to everybody, but it's very expensive. Whereas bank transfers, e-wallets, the likes of Wise, TransferWise, TransferMate, Transfer2, Remitly, all the new startup companies can move money quickly and cheaply, but you need a bank account to get money into the system. So we'd consider all these companies to be channel partners. So in terms of cost and accessibility, we're out on our own. Our management team, we have a pretty small team. There's 6 of us, all 25 years plus in our chosen fields. We have our founder team and our growth team. I can't overstate how good these guys are. Great, dedicated team, really skilled. Our financial details, we're on target for revenues of 350,000 this year, growing to 2 million next year and 7 million the following year. As Chris says, our initial target was 250,000. We have passed that, but we're still open for investments. And it's a safe note with a 20% discount, 10 million cap. To put some context on those revenue targets, with the average user that I've outlined already, to get our target users for this year, to get our target revenue for this year, we need 5,300 users. To get there for 2023, we need 106,000 users, which with the size of the market is 0.3% of the remittance market. And why invest? Like I said, it's a $75 billion market. We're disrupting it. We have a highly scalable, low-cost model. We have a significant cash collection market internationally, which is growing. We'll have another big announcement on that before the week is over. And it's a very active market for mergers and acquisitions. So we're targeting a trade sale by 2023. So I see Chris is back on the screen, which means my time is up.
Absolutely. Thank you very much, Ollie. Well done. And loads of questions coming through. So first one, how are you marketing yourself out to the client base? How's that happening for you?
That's a key question in terms of trust in payments. So we're a B2B platform. So our marketing is B2B marketing. So we're connecting with these banks, e-wallets, etc., which is done through networking, it's done through inbound marketing, etc. But the communication to the consumer is done from our partner. So you're hearing about Pipit from your own bank or from your own e-wallet or from a website that you use. So in terms of trust is key in terms of payment, trust in international payment is very important. So that consumer marketing is owned by our brand or by our merchants.
Very good.
Excellent. I have a question from an investor that I was talking to actually yesterday, just regarding, is there anything stopping Pipit Global partnering with the likes of Revolut, Firebank, Starling Bank in 26 as a cash collection point for, say, for instance, the hospitality? Now, he made a very good point in terms of the hospitality industry, delivery drivers, etc., that have cash and that want to actually put them onto their Revolut accounts. Can that be facilitated? Is there a way
Yeah,
potentially down the line?
100%. Yeah, so I mean, we it's mainly banks in emerging markets we're dealing with, but we're also in discussions with some of the neobanks. So yeah, those brands frequently come up as potential competitors when we're talking to investors, but we would consider us to be channel partners. We're a very collaborative business model, so we see partnering with as many companies as possible as our growth route.
Excellent, brilliant.
With regards to the disruption of the Western Union model, though, Ollie, the question here, kind of talking about the actual price differential, is price a big motivator for the migrants to actually, for them to change for channel money through you as opposed to the normal Western Union?
It's huge. On an average transaction, the migrant is saving £12 using Pipit. £12 on the ground in Lagos or Mumbai is a significant amount of money. So we're able to do this cheaper because our model is different, and we're not a peer-to-peer remittances. Our money goes into accounts or in a different kind of bracket in terms of KYC and money laundering, etc. But it is the main motivator for somebody to switch to using us. Other motivators are because the money's going into an account, nobody's collecting cash to far end, so there's a security element. And also because the money's going into an account, the sender can retain control of what the money is spent on. So they're the three kind of differentiators we have for the consumer.
Great.
Brilliant. A couple of questions in this one. So what is the component of cost incurred on providing the services, and specifically, and then talking about, do you have any mobile apps? Are you looking at that space? And what is the legal structure in place in terms of operating in the African countries? Do you have to have legal separate entities in each country that you work in, or how does that work, Ollie?
So in terms of costs, I mean, our cost structure is really based on our collection agents, and that varies from country to country. So the low end of that cost is 1.2%, the high end is 2.5%, which is included in our fees. In terms of dealing with the countries in Africa, no, we don't have to have African entities. So again, when we sign an agreement with a bank in Nigeria, they're signing an agreement with an Irish company under Irish law, and we use partners to settle the funds. So we don't actually handle the money. That's also part of our AML. We're what's called a technical service provider under EU legislation. We're a tech company. We're not a payments company. So for Africa, we partner with Flutterwave. That was one of my slides there. So they move the money to Africa for us.
Brilliant. Okay, perfect.
If you're not subject to the same KYC as financial institutions, are you concerned about the regulation changing that would place a KYC responsibility on you, given the volume of the money flowing through you?
No, in a word. So the relationship between the consumer and the bank is where the KYC is generated, essentially. So the bank or the e-wallet or the biller need to know who the consumer is and who's sending the money. So they own the responsibility for that. So we're a tech company facilitating a payment. Payment isn't to us or for us. So we're not part of that KYC. Our requirements, we do KYB, know your business. So we have quite strict process of due diligence and onboarding a merchant. But the actual consumer piece, which is, and obviously that's a one-off piece. So we onboard a bank once and we need to KYB them, as opposed to multiple consumers KYC.
Sure.
Excellent. Question here just on how big can the business get, and what are the kind of countries as well that you feel are low-hanging fruit for kind of partnerships going forward?
The countries, how big you can get is how long is this piece of string kind of a question. Big is the answer, I think. We're targeting 7 million revenue by 2023. We think that's conservative. In terms of low-hanging fruit, I mean the big sending countries are UK, Canada, US, UAE, and Saudi. Saudi is a kind of a tricky country to do business in. US, we're talking to some partners at the moment. UAE, we're talking to partners we're already live in Canada and the UK. So the big 5 senders we're already live in. It's really around, a lot of it's around old colonial routes. So I mean, the UK sends a lot of money to India, West Africa, East Africa, France to North Africa, Netherlands, Belgium to Central Africa. So they're the kind of the routes we're targeting. US is the biggest sender in the world, mainly to Latin America. UAE, Middle East sends to North Africa and to India, to Philippines. So we're kind of tracking all these channels and mapping them out and looking for partners in all these countries. So that's kind of our scale route.
Very good. Okay, Ollie, thank you very much indeed. That's a great number of questions, and there's still a couple more, but unfortunately we've run out of time. So we'll move on to the next one. So Ollie, thank you very much indeed. Well done. Yep. Okay, guys. John, are you there?
Hi, Chris. Yeah, I am indeed.
At least anyway. Yeah, good. Thank you very much. So as I mentioned before, John has raised 113% of his target at the moment. 340,000 has come in, which is great. There's headroom for another 20,000, I think you said, John, isn't there? Before, which is obviously going to be matched by EI if they go through their process accordingly, exactly, yeah. Which will be great. So, so if you are wanting to invest, there's a short window in order to do so, and a short amount of headroom in order to do so as well. So get in early. But John, I'll let you do your presentation first, and we'll then go on to our questions and answers after that. So
okay,
away you go.
I'm just trying to share my screen at the moment, and it is telling me that the let me just try again. It's failing to start. Here we go. Got it. Okay, perfect. You can see that.
Yep, perfect. Away you go.
Great. Okay, Chris, thanks very much for the introduction. My name's John Brady, and I'm the CEO and co-founder of Bowsy. Bowsy started in Dublin last year. We're based in the Guinness Enterprise Centre. We ended last year as being named as the winner of the Best Tech Startup 2020 for Ireland, which was judged by Enterprise Ireland and Microsoft, the National Irish Startup Awards. Just a little bit about Bowsy, what we do, and you know, a little bit of background. Basically, we're changing how employers manage their graduate talent pipeline by reinventing how students earn a living through remote study-related work. So everything that goes through the platform is related to a student's field of study. It can be anything from doing business plans, SEO, etc. And we're connecting graduate students through our remote platform with employers all over Ireland, you know, whether it be SMEs or large multinationals. We're based in the Guinness Enterprise Centre, as I mentioned. We're a client of the High Potential Startup Unit in Enterprise Ireland. We're also a client of Dublin BIC. As I mentioned, we've got quite a bit of recognition to date in terms of what we're doing. The Tech Startup winner. We were also named as one of the top 30 early stage startups in Europe by EUStartups.com. And a couple of months ago, we were the first Irish startup to win the Premier Cup pitch with Enterprise Ireland in the USA, which means we're the first startup in Europe to be joining People Tech Partners, which is a HR accelerator program based in the US, and we're joining them later on in the year. Just a little bit about the team. My background, I was a marketing director for a FTSE 10 company. I spent a lot of my career internationally. I left my job, really, the motivation behind this was my daughter, preparing her for university and realizing that in the 20 odd years since I've left university, although technology has changed, the nature of student work hasn't. You know, they're still delivering, driving, working in restaurants and bars, and that was the main motivation. Our team, as you can see, is very diverse. The core team are a mixture of recent graduates or current postgraduate students in Ireland, and also a network of professionals, you know, in this area. So I'm also joined by one of the co-founders, Professor Daniel Laya. He's a professor at the EI Business School in Spain, which at the Executive MBA program, which is one of the top 10 business schools in the world, ranked by the Financial Times. We have Lucas as well, who's our digital, working for one of the largest software houses in Europe. And then we also have, you know, a team of students who are working with in Ireland, so Renata, Lorna, etc. And we're also supported by a team of strategic advisors. So we have Roseanne from Noon Casey. IBM have appointed a partner for us as well, Stuart, who's their senior partner for Europe in digital transformation, and he's advising us as well. And then we're lucky enough to have 3 people on the ground in the US as well. We've Professor Colin Mitchell, who's a professor at RIT University in the US. We have Tiana, who's at the Washington Center in DC. And we've got Colonel Bob Matters, who's ex-State Department, working for Lockheed Martin, advising us on our business development strategy in the US. So a really nice team. Also the broader team, we're very proud of the fact we're 70% female as well. And we've got, I think, in total 10 or 11 different nationalities now working on the Bowsy project. A little bit of what we're doing is we're creating an online marketplace. We're creating a new marketplace that, I said, connects employers with students. And if you look at what the alternatives are out there, yes, there is some flexibility given with the gig economy, but most of that is, you know, non-study related. There's the traditional part-time jobs, there's the fixed internships, and we're looking at a brand new space here. It has to be remote, it has to be paid, and it has to be related to the student's field of study. So that translates into things like desk research, lead generation, you know, creating a business plan, doing price elasticity analysis. Basically, it mirrors the whole range of subjects that are available in the universities across Ireland. We make our money by charging 20% fee on top of what gets paid to the students. So an employer could nominate a project fee or an hourly rate, so long as it's above the minimum hourly wage. And then we charge the employer 20% on top of that. So it's free for students, there's no cost for universities, etc. And for most employers, it's significantly cheaper than the other market alternatives. We like to think that we're kind of creating a win-win for both employers and students. And I think the first thing for employers is it allows them to access a much wider range of talent that previously wasn't accessible, either because of geography, location, university, or costs. So for example, for the cost of, let's say, 4 traditional internships, you could access 70 students through remote project work on the Bowsy platform. It also replaces the CV and, you know, the snapshot of a student that you get through with a normal interview process, and allows a company to evaluate a student based on actual observed performance. So it's a far better way of evaluating the student over time. For small businesses, it's very attractive because it actually is, like I said, a lot cheaper than the market alternatives, and it gives a huge amount of flexibility. So we leverage the infrastructure of the gig economy, but we're reinventing the nature of work. So that means a company can engage with one student for 4 hours, you know, or they can engage with 10 students for, you know, 4 months, and there's no contracts, there's complete flexibility. And it gives the employer the ability to scale up or scale down, and it gives the student an alternative to kind of traditional work. From the student perspective, one of the big wins is based on academic research that shows students who are lucky enough to work in a job that's related to their field of study are amongst the best academic performers, have better networks, and go on to enjoy better careers. Yet the vast majority of students are still working in traditional jobs. And this disproportionately impacts lower income and minority students, who often have to work longer hours to make ends meet. Their academic studies and performance suffers, and their networks and careers, you know, are compromised. And Bowsy addresses that problem. It also helps eliminate skills gaps, so it gives students kind of practical hands-on experience, which is a big barrier to them finding jobs. It's very important that we give equal access, so we create a level playing field. So it doesn't matter what your background is, where you're located, what university is, everybody has equal access to opportunities. And then lastly, it allows the student to understand what they're good at, you know, where they can add value, what they enjoy doing. So from both scenarios, it adds a huge amount of value. Like I said, we've been around for under a year. We've been cooperating with the Smurfit School of Business actually for nearly 2 years, like from concept stage. We're involved also with Trinity and with UCD. We have 50 businesses on the platform at the moment. We've done projects across 7 countries. We've also made our first steps in the US, which means we're joining the People Tech Partner Program in the US. Their partners include Udemy, SAP, Netflix, Twitter, and we're starting that in September. And like I said, we've already have traction. We're talking to universities already in the US, and we just completed our first project with the Executive MBA program at Tulane University in New Orleans in Louisiana. We are a kind of a cloud-based solution, so it's a one-stop remote working solution. It's integrated task management, secure cloud services, secure payment solutions through Stripe, smart AI matching students with jobs, and integrated chat and video conferencing. So we were talking about this in 2019 before the lockdown, and obviously attitudes towards remote working have changed completely, you know, in the past 12 to 18 months. We have a very strong innovation pipeline, and we just signed a technological partnership with the El Dorado Institute, which is one of the world leaders in AI and machine learning. And they're partnering with Intel, IBM, Microsoft, Dell, to name a few. The market size is huge. In Europe, it's around 3 billion euros. In the US, it's around 5 billion euros. And that's basically looking at the value of student work across the various different markets. Just to make the point, we're very unique. You know, there are a lot of companies out there, but nobody's focused primarily on students. Nobody's study related only, and nobody's looking at remote work only. And then there's a lot of other technical reasons how Bowsy differentiate ourselves from the competition. This is just some of the key assumptions behind our business plan. To put this in context, you know, our actual performance to date it has been ahead of our business plan. So we had kind of planned on 9 hours work per customer per week. It's actually coming in at 19 hours. Our assumption for year one in Ireland is that we've 121 businesses. That starts after the seed funding comes in. We're already halfway there with 50 businesses already. So we've got very ambitious plans that look at actually the UK as well as the US, and then expansion within other EU markets. This is what the revenue looks like. We're looking at close to 2 million euros in terms of revenue projections next year off a relatively low cost base. And like I said, at the moment, we're ahead of where we should be in terms of the year one plan and projections. And then just finally, just about we're raising 300,000 for giving away around 15.8% of equity in the company. We have a pre-money valuation of 1.6 million. With the EIS, this translates into a value of 960,000, you know, for people investing in the company. And the funding is matched by Enterprise Ireland. That's why we're putting a cap on this round. So we're hoping to raise somewhere in the region of 360,000 euros, or we'll finish the next 3 days, whichever goes further. Just very quickly, just a few kind of reasons in terms of the traction. We have now started engaging with big multinationals who are very interested in this. The average contract size for a multinational will be somewhere in the region of 120 to 150,000 euros in terms of revenue over the first 2 years. And we're in discussion at the board level with 10 blue chip companies based in Ireland that also have, you know, offices elsewhere. To put that in perspective, last week we were invited to join the diversity inclusion talks in the US with the heads of diversity or the global heads of human resources with companies like Amazon, Pride Industries, Remitly, Takeda as well. And that's the level that we're engaging in, and we're seeing a huge kind of response to what we're doing. And then just to say very quickly, we're open for the next 3 days. We were super excited to hit our target last week. We're now at 340, I think, and like I said, we hope to exit around 360. And just to say very much, thank you very much for your attention, and happy to answer any questions.
John, thanks very much indeed. Very well done. Very well done. Yeah, good number of questions coming in here, and I'll go with the first one. So someone's asking a question as a business owner. They receive graduates from universities directly from, you know, on the Erasmus or internship. So why would they use your platform and pay a 20% you know, fee for that? What would you say to that, John?
I think a lot of companies, particularly the SMEs, you don't have the ability to kind of build their own networks in terms of, you know, with other universities. And I think what Bowsy will do will provide a scale, and a lot of big companies will have proprietary relationships with 1 or 2 universities. Bowsy can replace that to access to universities all over Ireland and all over Europe. So what Bowsy can do is give you access, flexible access to kind of, you know, 30 or 40 universities, which is very hard for anybody to replicate. And it also brings a lot more flexibility and admin. So a lot of the kind of internships, you know, are kind of fixed internships, you know, for fixed hours. This gives you a lot more flexibility than traditional internships, and allows you to cast your net a lot wider. So instead of engaging with 4 students, you can engage with 70 if you're looking at how to improve your graduate recruitment pipeline.
Very good. Of course, then you can whittle those down to the people who you actually want to keep thereafter, as well.
Excellent. So it's great, John. So just one here. So is your business model remote piecework for students in their academic field? So that was a
exactly
kind of summary of.
Yeah, I mean, there's a huge untapped workforce there. You know, whether it be people in ICT or in marketing. who you know, are used to working like in kind of self-managed teams, and they're disconnected from businesses. And you know, one of the big things that we did coming up to Christmas was helping a lot of businesses get online for Christmas. You know, so you know, students who were stuck, during lockdown, businesses that were struggling to compete with the Amazons, etc. And you know, we were able to help businesses get online. Companies or students were allowed to, where a big lot of work we did was identifying grants for companies. So they would do the research for the companies, they would do the business plan submission. You'd have somebody from marketing, somebody from finance working on it. So it really benefits the students, giving them the hands-on experience. At the moment, we're mainly focused on final year and postgraduate students who are closer to the job market and benefit from it the most.
Brilliant. No, I wish you guys were around when I was in when I was doing my BCom in Galway. Would have saved me a lot of time.
That wasn't last year or the year before.
No, that was.
Okay, another question. Can the student continue after they graduate then, John?
Yes, they can. So first of all, we're very much about supporting the student in a transition to the job. So, you know, when a student graduates, they can continue to work on the platform, and that's the case now for some of the students. They can work for up to you know, a year in some cases until they get their job. We also have, like in our business model going forward as well, a placement fee for employers who actually will hire a student coming through Bowsy, and there's a placement fee around €3,000. But that's not reflected in the first couple of years of our business model. But that's there as well as an additional source of revenue coming through, as well as a 20% transaction fee.
Very
Excellent.
Good.
I have a question just here in the chat, just regarding the partnerships with the universities. How difficult is it, John, or how difficult do you think it's going to be to gain that relationship with the academic you know, foundations and colleges and what have you?
The universities have been hugely receptive, highly receptive of this, and I think, you know, most of the time it's, you know, it's one or two conversations to understand that, you know, where we have students' interest at heart. It's a win-win. And like I say, the Smurfit Graduate School of Business we've been talking to working with for over 2 years. We now have UCC. And then even like in the US, for example, like Tulane University, I think one day when you explain the concept that this is, you know, it's about helping students, it's not about a cheap alternative, you know, to a Fiverr or something else like that. You know, that we make sure it's remote, we make sure it's paid, you know, we make sure it's academic. You know, they see the benefits in it, and you know, every door we've knocked on has remained open. And you know, they're sending us emails. You know, we also get requests from companies for different kind of skill sets. We talk directly to the careers office as well. We also work with the student centres or the student unions as well. So there's a very strong relationship that's evolving, and it's continuing to grow now with other universities.
Brilliant. Yeah, and of course it's excellent for the CV as well, you know, for relevant job experience.
We've had a lot of students come back to us who've got jobs, like even the guys who are working with us in the early stages on the core Bowsy team, who went on to jobs in Accenture, went on to jobs in Amazon, and they've all come back to say that was a huge part in differentiating themselves from other candidates in getting that. So it's a real win-win for the students as well.
Perfect.
That's great.
Excellent.
Right, John, thank you very much for that. We've reached our time limits, I'm afraid. So thank you very much for that. And Fergal, thanks very much for your questions as well. And so I'll wrap up and say thanks very much, and goodbye from everybody, and we'll see you again soon. Thanks very much indeed. Cheers now, guys.